morning, Lagos. Good morning, everyone. This is Follow the Money, brought to you by Nairametrics. My name is Ugo, and we do this every Monday, 8 to 8:30 on this station, Classic FM 97.3. How has your weekend been? I don't know how mine have been. I think that it's been a little bit busy with a lot of work. It's been earnings season, so a lot of analysis done over the weekend. But what is this with this forecasting anyways? Like, what is it with forecasters? There's just so many things you can't understand about this country. You just wake up every morning and you just want to go on with your life, and then somebody just comes out there to want to frustrate you. If you're coming towards the Odo Road area, it's hellish around there. A lot of traffic, a lot of cars. That is. I don't know what it's like other parts of Lagos. Be interesting to know. But anyway, this show is all about following the money, and that's what we're here to do. Just to take that stress off you. You know, sit down, relax, and let's see where the money is last week and this week. Where are we going with the money? And so this week, I'm going to be running solo because it's the earnings blitzer. So it's earnings season, and if you're somebody who follow me a lot, you know that I love this because this is the period where companies release their results. And we tend to analyze those results and see what it means for you, the investor. And so if you own these stocks or like these companies are companies that interest you, I'm going to be giving a little bit of a rundown to their numbers during the week. So you want to pay attention because you see, the thing with you guys is when you buy shares, that's one mistake a lot of people do. You buy shares and then you just keep it in your cooler and you expect that it's going to do magic for you. You know, like, I just bought the shares and then in 5 years it's going to triple or quadruple and then you'll be so rich. It doesn't always work like that. Right? So when you invest in anything, you gotta always pay attention to it. You know, stocks are almost like your own kind of inventory. So you can't like be someone who, for example, maybe you sell cars or you sell clothes, and then you just keep it and expect it to just sort of double or multiply. You gotta always check your inventory. So stocks are kind of like that. So you gotta always check your investments and be sure that they are doing really well. Right? Because when you know that you're doing well, then that determines whether you want to keep holding on to that stock or not. And if they're not doing well, you also want to pay attention and find out, is it just a temporal issue or is it a long-term problem, so that you can probably just exit that stock on time. Because I see people say, I bought this stock and the thing just crashed. It doesn't just crash like that. It gives you signs. And the only time you know is when you pay attention to what's happening to that company. So stocks are things that you nurture. They're like, it's like you owning the business and living that business. If you're a shareholder of a company, you're basically a part owner of that company. So you want to know what's happening there. You can't own a company, right, and don't know what's going on in that company, right? Yeah. So the same thing with stocks. So you want to pay attention to these companies that I'm going to be discussing today. Unilever did push out their results. So we're going to be discussing Unilever today. Transcorp Hotel released amazing numbers last week, so we're going to look at that as well. FCMB, if you have shares in FCMB or you're interested, they're coming up with a public offer pretty soon. You might want to pay attention to what their numbers were like. Transcorp Power, another of the Transcorp group, also released amazing numbers last week. And of course, the largest company on the Nigerian stock market, worth over 10 trillion, Dangote Cement, also released his numbers last week. And of course, we also have Guinness. They were in the news a few months ago. The year end, it's usually June 2024. They also released their numbers. Do you know how they did or how they fared? Pay attention. I might touch on that as well. Of course, confectionery maker that makes all those chocolate drinks that we like to take sometimes. Cadbury, they also released their numbers. They've had a very difficult 2023. Did they do better in 2024, at least the first half year? Have they been able to sort of ride out those losses? Maybe you want to find out as well. And of course, if there's time, we'll go into Okomo Oil, one of my favorite agro companies. And of course, Airtel, a telco company, they also came up with their result last week. So you can see like loads and loads of results that came out last week. I don't know if there's going to be time to go through all of them, but I'll see what I can do. All right, so we'll go right into it. Unilever released their half-year result last week. Revenue was up 41% to 63.9 billion. Interesting because, Unilever has had their own struggles last year with FX related issues, but they've sort of been in there somewhere hanging in. At some point, they actually wanted to delist from the exchange and get the hell out because, I mean, they were just having too many issues. But I think shareholders are sort of pushed back and discussions are ongoing. Nevertheless, the revenues were up 41%, mostly due to increase in prices because a lot of companies have decided to just, you know what, let's just increase prices. Inflation is going up, let's increase prices. So by 41% up from a year ago, that's basically beating inflation. So this guys really jacked up their price. So if you buy any of these Unilever products, you probably must have seen price increase, whether it's Lipton Yellow Label Tea, Knorr, Royco Cubes, yeah, prices probably have gone up. And then gross profit also doubled year on year to 26 billion. So they sort of, you know, done well, not just with price increase, but also with margins as well. Because when your gross profit goes up or doubles, that means you've done very well with margins. And of course, they still came up with an operating profit of 3.5 billion, largely, because of operating expenses. They had huge expenses, during the year. Expenses also went up 163%. You see? So even though gross profit was up 100%, expenses also went up 163%. We all know why, because of inflation, higher cost of doing business. And so the company ended up with a pre-tax profit of 6.3 billion, still 7% up year on year. Tiny growth, but still important, especially when you know how difficult things have been for a lot of companies. What we also noticed was that Unilever did post a revaluation gain of 2.5 billion on its imported goods, which, you know, compared to 2023 when they posted a revaluation loss. So what's going to happen now? Are we going to now tax that revaluation gain? I'm not trying to put ideas into anybody's head, but we do know that the so-called windfall tax is for the financial services sector, banks especially. So companies on the main street don't get affected. And by the way, Unilever did post revaluation losses a year ago. So now that they're doing revaluation gains, I hope that nobody's going to come after them. So Unilever, you know, that's your numbers, positive numbers. However, I don't know what happened. I think the market kind of reacted, you know, was kind of flat. The stock market didn't really react positively to those numbers. That's the problem with Nigerian stock market. They just don't seem to always dead with their reactions. Gotta react better here. All right, so we move on now to the next stock on my list, Transcorp Hotel. Transcorp Hotel is the company that owns Transcorp Hilton Abuja, one of the biggest hotels, if not the largest hotel in Nigeria. Did pretty well last, first half of this year, up 61% year on year in terms of their profits. Cost of sales also up 71% year on year to 8.5 billion. But at the end of the day, they still did well with gross profit. I told you gross profit, which shows that, and they were able to manage cost, at least fixed cost. And then they came up with 57% up year on year to 21 billion. So they've done 21 billion in the first half of this year alone. So up 57% when compared to the previous year. Operating profit, one of my best measures of how a company does well. Because when you look at operating profit, you're basically saying, look, this is the profit the business has actually made, other than, what the owners of the business have put in terms of either taking loans or anything else. That's the people who run that business. This is really how you measure how well they're doing well. And when you post operating profits, then that's solid. And Transcorp Hotel came up solid 116% year on year growth in operating profit. That's just astounding. Standing numbers there to 12 billion. And even operating margin was even crazy at 41%. That's just solid numbers from the company. So I'm wondering, is hotels doing well now? And are people really, really occupancy rates going up? Because it looks like they're having solid business. And the funny thing, hotels are usually a bellwether for how well an economy can be doing. Kind of maybe looks like there's a lot of businesses going up in Abuja right now. A lot of people coming into the country to try and do business. Probably why their numbers are so up. Of course, we do know that room rates have gone up over the last 1 year, but the fact that their margins are this solid perhaps also suggests that the business is robust and the business is doing well. Transcorp Hotel have been trying to replicate what they did in Abuja in Lagos, but I think, the investment climate has sort of slowed that down. It'll be interesting to see what happens over the next few years as things start to turn positive in the country. Perhaps maybe they might want to revisit that Lagos project. Of course, Transcorp also posted revaluation gains. They called it unrealized at 3.9 billion. But you mentioned that, because if you don't say it's unrealized, you never know what these tax guys are going to be looking at. But they also incurred high energy costs. I kind of took that note. Energy cost went up 81% for the group, and that was up 81% year on year to 2.2 billion. So they've spent 2.2 billion in energy costs in the first half of the year alone. So it's looking like their power costs, their electricity costs might be hitting 4 billion. That is one message I've got from a lot of companies. They've complained a lot that, look, this new electricity tariff increase and all that has basically impacted on their expenses. So for some of them, they've actually been having near 24-hour power, but they used to pay at 70 naira or so, per kilowatt hour, but now they're paying at over 200 naira. So all of a sudden, they've just seen their power costs sort of triple without necessarily anything different in terms of how the power comes. Of course, we all know why government stopped subsidizing Band A customers, and that is why that power cost is going up. Not really sure if that is really what affected Transcorp, because I want to believe they generate to a large extent their own power, but their energy costs did go up. All in well, solid numbers, for the company. In terms of share price, strangely, again, the market kind of reacted negatively. The share price was down 9%. I don't know why, to 88.6 naira. Perhaps we're looking for something else. I can't really figure it out, but those numbers were solid. So if you got Transcorp shares, and you got to be happy with those numbers, pretty impressive. And then we go to Okomo Oil. Okomo Oil has been solid for the last 5, 6, 7 years. I can't recall the last time this company had a profitability drop. So if you're a shareholder of Okomo Oil, I've been a shareholder of Okomo Oil for like maybe over 10 years. I could remember buying this stock at maybe 35 naira or so back then. This stock is currently trading at over 200 naira there, but I'm going to confirm that price later. But that stock has been doing pretty well. They also released their pre-tax profit, and it hit 6.2 billion in the second quarter of the year as well. Turnover 13 billion, cost of sales 11 billion, pre-tax profit pretty solid for Okomo Oil. Solid company. Always said that they're into agro. They're agro-allied company. Not doing that badly at all. They're similar to Presco. And the funny thing with these agro companies, despite the ones that operate locally, is most of their business is local. They actually have very limited export in their revenue mix. Nevertheless, they seem to keep growing because it looks like they have very solid demand for their product. Okomo Oil essentially deals in oil palm, and so that company has been doing pretty well over the years, not had any major issue at all. Could it be maybe a stock peak at some point? Maybe when I do my buy, sell, or hold analysis, we'll probably see if Okomo Oil is worth the price at the moment. But interesting numbers here. Solid company. If there's one company you want to have in your portfolio as a defensive stock, it's always going to be like Okomo Oil if you get it at the right price. Because the funny thing is that they just always kind of do well all the time. They just do well. They're just solid. The business just looks kind of insulated from a lot of the challenges, that we've seen. All right. So we now go quickly into Dangote Cement. Before we go on the break, let me just go on to Dangote Cement. Dangote Cement, like you know, is Nigeria's largest company on the exchange, largest company on the exchange. And the company posted a pre-tax profit of 293 billion in pre-tax profit alone, not revenue. Pre-tax profit. In fact, revenue was 1.7 trillion. So it kind of looks like Dangote is on track to double the record revenue it did last year. It did about 2 trillion or so, 2.something trillion or so in revenue last year, the whole of last year. Already in the first half of the year, Dangote Cement is doing 1.76 trillion. That is 85% up year on year. So it's like an amazing year for this company. Of course, again, just like the other companies, it's been all basically about jacking up prices. So that had to happen because they had to jack up prices because of inflation. Who's not jacking up prices now? Everybody's jacking up prices, so they also jacked up prices. From what we gather, volumes haven't ticked up that much, but still slight little bit of growth, which also is reflective of where we are in the economy today. And where we are in the economy today is that prices, volumes are not that much. People are not building as much as they're building. But nevertheless, the company seems to have recorded solid numbers. Cost of sales, by the way, doubled to 833 billion. So you see, even though revenues were up 85% year on year for the first half of the year, Cost of sales were also up. Nevertheless, they still did gross margin of almost $1 trillion. Just incredible numbers here. 926 billion in gross margin. And of course, my favorite marker, operating profit, 551 billion. So in terms of margins, Dangote Cement is doing 31% operating margin. What does that mean? For every 100 naira of revenue that this company makes, it keeps 31 naira as operating profit. That is before you start to take, into cognizance loans, finance costs, and all that stuff. But the business itself keeps 31% or so off the revenue that it makes. Which is solid numbers in terms of margins. And of course, profit before tax, like I mentioned, was 293 billion, up 22%. Now, what was shocking to me, however, is despite these solid numbers, Dangote Cement's share price dropped 10% last week. What is going on? So I was trying to figure out, is it that investors weren't really happy with what they were seeing? Or did they perhaps were expecting some kind of dividend? Or was this just a general sell-offs that tend to happen in the exchange? Nigerian stock exchange just sort of defy odds sometimes. Difficult to figure out what investors are thinking, but I guess maybe they're just sort of worried that, maybe the share price is slightly, because the share price is, in terms of price to earnings ratio, little bit in the double digit figure, very pricey compared to Nigerian banks. But remember, Dangote Cement is also very defensive stocks. Defensive stocks are those stocks that share price just don't drop like that all the time. So when it goes down by 10%, I'm asking myself, is that a buy-in opportunity? Or do we keep selling? Maybe I want to hold on for my next Follow the Money podcast and then I sort of break that down. All right, so that has been the first half of the show. I've already given you guys about 4 companies already. We've talked about Transcorp Hotel. We've talked about Dangote Cement. We've talked about Okumu Oil Palm. We've also talked about Unilever. And when we come back, we're going to touch on a few other stocks in a bit. We're back. This is Follow the Money, brought to you by Nairametrics. My name is Ugo, and I do this every Monday, 8 to 8:30 on this station. Of course, if you've missed any part of this show, you can always go back to any of your podcast platforms, especially Spotify. Just search for Follow the Money Nairametrics, and you will see this particular episode is going to go up in the next few hours, and other episodes of the show. Of course, I also do this daily as well. So if you're looking for, maybe you want to hear me more often daily, break down some of these things, because I go in depth. Just 10 minutes, 10, 15 minutes, but trust me, it's in depth. You can check that also on any podcast platform, even on YouTube. You want to probably go check YouTube. I dropped a podcast just over the weekend as well on YouTube, so you might want to check that out. I was trying to explain the difference between right issue, public issue, and market price of a share. Why are they different? People have been asking me, how come right issue prices are more expensive than the stock market price? Should I buy on the stock market, or should I just buy a right issue or public offer? Very interesting question. I dropped it there in my podcast, so you might want to check it on our YouTube channel. Just go Nairametrics and you see it there. All right, so we're back to the earnings blitzer. Yeah, that's where we are today on Follow the Money. I've been talking about results of companies. So if you own some of the stocks that we've talked about, you might want to go check them out. And probably want to take notes, because I've been breaking down their numbers. FCMB, one of Nigeria's foremost banks, also dropped his numbers. One of the first banks that have dropped his numbers in the first half of this year, giving us an indication of what is to come for other banks. And pretty interesting, their gross earnings was up 57% to 374 billion naira in the first half of the year. And net interest income also up 47% to 106 billion. So that is their core business, meaning that in terms of lending, their lending business, the company also did pretty well. Unrealized FX gains was down 31% to 35 billion. Of course, we all know why that could have happened, which is pretty strange. I want to check that number again. But pre-tax profit at the end of the day was 64 billion, up 68%. So if you're an FCMB shareholder, you should be happy. The numbers were pretty solid there. Year on year earnings up 68% to 64 billion. I like to look at pre-tax profit in case you're wondering the first half of the year, because that's what really matters. At the end of the year, you can always look at profit numbers, but in the first half of the year, especially when it's just interim results and the company is not likely to pay dividend, you might want to look at the pre-tax profit. That's why I look at it. But pretty solid numbers from FCMB, and it looks like the market kind of loved it because I saw their share price was up 8%. FCMB is about to release its own public offer as well. So this is very solid for them. I'm sure they're pretty happy at their investor relations office there that, oh my God, we got solid numbers for FCM. So probably suggests that banks might do well in the first half of the year, contrary to most opinion. The only headwinds for banks now is this windfall tax, because despite all this profit that is made, the fear is that they might not be able to pay a lot of dividend at the end of the year because of windfall tax. But it'll be interesting to see how that pans out. But solid numbers for fans of FCMB. And we move now to another company in the Tony Elumelu family. Yes, we already talked about Transcorp Hotel. I think last week we talked about United Capital. This is Transcorp Power. Transcorp Power is the second quoted power company listed on the exchange, and they came on after Geregu Power, who also did solid numbers, by the way. I think we mentioned that a few weeks ago. But Transcorp Power revenue was up 140% to 135 billion. There's a power generating company, and looks like these guys are minting some cash here. Gross profit was also up 136% to 63 billion. And I'm like, companies are really dropping solid. Like, there's billions and billions and billions of naira of profits here. Of course, little bit of foreign exchange gain, 1.1 billion. Pre-tax profit up 214%. Maybe you didn't hear me. Pre-tax profit up 214% to 51 billion. So they basically quadrupled their numbers from the year ago. So solid numbers. Earnings per share at 490 kobo. Transcorp Power is one of the swoots. At Nairametrics, we call swoots stocks worth over 1 trillion. There are not a lot of them in Nigeria at the moment, but they are one of those companies that are on the suit. Transcorp Hotel as well is also a suit, by the way. So they basically have run solid numbers here. Most of their numbers, and because you're probably wondering, where did they make all this money from? So from the breakdown that we have, Transcorp revenue includes 42 billion in capacity charge. So capacity charge is one of those revenue lines that power generating companies tend to make money from. So it's a charge that they, distribution companies and other companies in the value chain for keeping so much capacity in power. And of course, they now earned another 93 billion from actual energy delivered to the sector. So solid numbers from Transcorp Power. Interestingly, again, not sure that the investors were totally happy with the numbers. I don't know why, because numbers were pretty solid from what I see. Share price was down 10% to 336 naira per share. As well, which was pretty surprising. And I also learned that Transcorp Power is likely going to be paying dividend as well this year. So not really sure why investors looked at that number. Again, like I said, when share prices go down as well, it could be a buying opportunity. So you might want to listen to my podcast later this week, and let's see if Transcorp Power makes it to my buy, sell, or hold category. Which one? Buy, sell, or hold? Not really sure yet. Now we go into the next company that released numbers last week. Guinness, we all know Guinness was in the news last week because Diageo has decided they're done with Nigeria. Well, at least, owning Guinness directly in Nigeria, and they sold their stake, or they are selling their stake to Toleram. So it's pretty interesting to see how their numbers come up. Guinness year end is usually June 30th every year, so they don't do the regular calendar January to December 31st. So Guinness tends to do his year end June 30th, and so we're all anticipating these numbers. We all know how Nigerian breweries did. It was pretty tough for Nigerian breweries, very tough for international breweries as well. So it's no surprise that Guinness also fell into that bucket. Been a very tough year for everybody. Nevertheless, their revenue was up 30% to 299.5 billion. So the point is that these guys are actually still selling, even though volumes might not be pushing out that much, but they are selling because of price adjustments and price increases. Cost of sale was also up 37%. So even the revenues was up 30%, cost of sale was up 37% rather, to 208 billion, and then gross profit 91 billion. That my favorite number that I like. Operating profit was up 9% to 25.4 billion for Guinness. So here was the problem. Despite doing very well in terms of operating profit, 25 billion, solid numbers, 9% up, in a very difficult economy. They kind of tried. The issue, again, was FX cost. So Guinness incurred a net finance cost of 99 billion. I mean, like, let that just sink in your head. A finance cost of almost 100 billion in interest payment. Like, it's just crazy. 99 billion, 99.1 billion to be precise. Almost 100 billion in interest cost alone, and that not because the banks charge them higher or anything. It's just because most of their loans are in forex, and so they had to incur that, right? You see, 99 billion, and that is why the company ended up with a 73.7 billion loss before tax, and the total loss for the year reduced because of taxes, of course, to 54.8 billion. The funny thing is that when you make losses, you get tax credit. That's how Nigeria works. But in terms of their loss before tax, 73.7. So again, the core business itself is not doing that badly, because the core business did 25.4 billion, which I told you is my favorite number. So, but because of the finance cost due to depreciation of the naira, this company has ended up in the red, and even their retained earnings had also been affected drastically. So that's it for Guinness. So shareholders of Guinness, it's a very difficult period. But what we suspect is that Tolaram is likely going to delist this company so that they can go into some kind of restructuring and come back stronger. I guess that's what's going to happen. So again, we'll discuss Guinness, buy, sell, or hold, whether it's still an opportunity for us to buy or sell or hold in my daily podcast. I will move on to another company that's similar to Guinness, consumer goods company that has been struggling as well. Cadbury also releases his numbers as well. Revenue up 44% to 51.4 billion. Again, they're all giving you solid revenue numbers. Even operating profit was kind of down though, 22% to 4.7 billion. Looks like they weren't able to manage their cost of sale, because cost of sale was up almost 65%, hitting their gross profit margins lower by about 6% to 9.5 billion. So Cadbury kind of struggled with margins, perhaps due to a lot of competition. The thing with consumer goods companies is that it's very difficult to compete, because you're not the only one selling that product. Everybody sells all sorts of things, so they compete with all sorts of people. And when they compete with all sorts of people, it becomes a price war, almost like a race to the bottom. So even if you jack up your prices, you still gotta contend with operating cost. And operating cost for these companies is pretty expensive. They incur a lot in power cost, they incur a lot in administrative cost, they incur a lot of cost that tends to impact their business. And I think most of their raw material inputs are also imported, and so that is why their cost of sales tend to go up. So for companies like Cadbury, I guess what they're trying to do is figure out how to wean themselves out of reliance on foreign imports. Interesting to see how this company continues to sustain, or whether they're even going to keep being interested in this market, because it's just been a very tough few years few years for that company. And so they basically ended with a loss after tax of 9.7 billion, down 33%. And nevertheless, they still have cash of 14 billion in the balance sheet. Their cash numbers are down 30%. So that is something that will pay solid attention to. And then we want to go to Airtel. Airtel released its numbers as well during the week. Airtel is Nigeria's second largest telecom operator. Interesting to see Airtel's numbers for their first quarter. Airtel as well does its year end in March. So Airtel's year end is March of every year, March 31st. So their first quarter essentially ends in June. And so their numbers were down 16% to 1.16 billion. Operating profit was also down 27% to $335 million. Airtel Africa reports their numbers in dollars because they have Airtel Africa includes all their subsidiaries in the whole of Africa. Of course, Nigeria is one of the major subsidiaries, and they did complain of FX related issues as having impacted their numbers generally. So Nigeria basically dragged Airtel's number across Africa. All right, guys, that has been a roundup of all the earnings that have been out this week. I kind of took everything, incredible stuff. I hope you all took good notes. If you are interested in listening to the show again, of course, you can always go back and play any of the past editions on our podcast channel on Spotify or Apple Podcasts, or anywhere that you listen to podcasts. You would see this same version and previous version of the show. And of course, follow me daily, because I'm going to be going further into the stocks, and you're probably going to be seeing my recommendations, my buy, sell, or hold on my next daily podcast. Until we do this again next week, do have a profitable week ahead. This has been Follow the Money, brought to you by Nairametrics.